Hello everyone. Welcome to my YouTube channel Indian Bull vs Bear. In today's video, I will share my analysis of historical trends of the refinery sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The refinery sector of Indian share market comprises of companies which are involved in the processing of crude oil into useful petroleum products like petrol, diesel, LPG, kerosene and aviation fuel. India is the third largest consumer of oil globally and a significant exporter of petroleum products, making the refinery sector crucial for the economy. The key growth drivers for the sector includes rising domestic demand, export opportunities, capacity expansion, technological advancements, strategic location advantage, and energy transition. The government supports the sector with policies like privatization and disinvestment, auto fuel policy, energy security initiatives, promotion of biofuels, and FDI liberalization. The major challenges for the sector includes volatility in crude oil prices, high capital expenditure, environmental concerns, global energy transition, geopolitical risks, and regulatory compliance. Now that's a summary of the sector. Let's now try to identify trends in this sector using two graphs, yearly returns graph and monthly returns graph. I have analyzed the share price movement of last 10 years of top 7 companies of this sector and created these graphs based on that data. I have included only top 7 instead of top 10 because the market cap of rest of the companies were less than 100 crore rupees. The top 7 companies of this sector comprises of 5 large cap, 1 mid cap and 1 small cap companies. So let's try to identify some trends using the first the yearly returns graph. So this is the yearly returns graph. The green bars here in this graph shows the positive yearly returns. The red bar shows the negative yearly returns. The orange line shows the cumulative returns. The red line shows number of months with positive returns, and so the green line shows the number of months with positive returns, and the red line shows number of months with negative returns. So let's start with 2015. In 2015, this sector gave very good returns of 59.47% with 9 positive months and 3 negative months. In 2016, although the returns decreased a bit, but still the sector gave very good returns of 41.07%, 8 positive months and 4 negative months. 2017 was similar to for 2016, and the sector managed to give 42.38% returns with 7 positive and 5 negative months. But then next 3 years were very bad for this sector as the sector gave back to back negative yearly returns. In 2018, it gave minus 24.93 percent with 9 negative months and 3 positive months. In 2019, it gave minus 10.11% returns, again with 9 negative and 3 positive months. And in 2020, the sector gave negative returns of minus 9.44% with 6 positive and 6 negative months. The situation improved in 2021, and the sector managed to give average returns of 18.05% with 7 positive and 5 negative months. In 2022, uh, the performance of the sector was similar to the previous year, and the sector managed to give 20.91% returns with 6 positive and 6 negative months. 2023 was a very good year for this sector. In fact, the best in the last 10 years, and the sector managed to give 78.60% returns in that year with 11 positive months and only 1 negative month. 2024 was an average year for this sector, and the sector managed to give only 20.28% returns in that year with 7 positive and 5 negative months. Now to see the cumulative return, let's follow the orange line till the end. And in 10 years, the sectors managed to give 500.19%, which is 6x in 10 years. Not bad, but not very good as well. Let's see the key takeaways. So first is the cumulative return. We have just seen that 500.19%, which is 6x. CAGR of 19.63. Now this is not bad, but a majority of the sectors or a lot of sectors have CAGR uh, well beyond this 19.63 mark. So it's an above average number, I would say. Net negative yearly returns, so 3 times, so 3 years gave net negative year returns, and we have seen that 18, 19, and 20, the three consecutive years which gave negative returns. Best year was 2023 with 78.60% returns, and the worst year was 2018 with 24.93% returns. The positive to negative year ratio is 2.33 is to 1, which is average, not the best, not the worst, somewhere in middle. So it's an average number. So it's an okayish graph, average graph, I would say. Let's see the monthly returns graph as well. So this is the monthly returns graph. The green bars in this graph shows positive mean monthly returns, whereas the red bar shows negative mean monthly returns. The green line shows number of years with positive returns, whereas the red line shows number of years with negative returns. So let's start with January. January, an above average month with 2.83% annual monthly average returns, five positive years and five negative years. February seems to be a bad month for this sector. In fact, the worst with minus 1.63% average monthly returns with seven negative and three positive years. March, a flat month for this sector with 0.57% returns, five positive and five negative years. April is clearly the best month for this sector with 8.84% average returns with 8 positive and 2 negative years. May, another flat month for this sector with 0.58% average monthly returns, 7 negative years and 3 positive years. June, an above average month with 2.72% returns, 7 positive years and 3 negative years. July, one of the stronger months for this sector with 5.17% returns, 7 positive years and 3 negative years. August, another flat month with 0.75% average monthly returns, 6 positive years and 4 negative years. September, the second of the two months with negative returns average for this sector with minus 1.01% average monthly returns, 5 positive and 5 negative years. October, another flat month for this sector with 0.71% returns, 7 positive and 3 negative. November, average month with 1.32% returns, 5 positive, 5 negative, and so is December, another average month with 1.48% returns, 6 positive and 4 negative years. So it's a terrible looking graph, to be honest. Although there are only two months with negative average returns, there are one, two, three, 4 months with flat returns and couple of months with average returns to be best. So 4 and to 6 and to 8 months does not produce any returns for its investors. In fact, there are only 2 months, April and July, which give some kind of significant returns to its investors. Anyway, let's look at the key takeaways. So the cheaper months are February and September. So February and September are clearly the cheaper months. They are the months with negative monthly averages, but there are several other months, for example, March, May, August, and October, which are flat, and couple of months, November and December, which are average, which have average returns. So those all can be considered as cheaper months as well for this sector. Costlier months are April and July. So April with 8.84 and July with 5.17 are the, in my opinion, are the only 2 months which make some kind of money for its investors. So this is, otherwise this sector does not make any money for its investors as such, other than in these 2 months. Positive to negative month ratio is 1.26 is to 1, which means 1.26 positive month against each negative month in the last 10 years, that is in the last 120 months. So again, a below average number. We have seen sectors having this ratio less than that. We have seen most of the sectors having this ratio better than that. So It's an average number, and that is the sector as well. It's an average sector, good for the defensive sort of investors, conservative investors. Looks to be a defensive sector. You can see there is no significant drop in returns in any month, and so as there is no significant positive returns as well. So that is all from my side in this video. Thanks for watching it. If you have liked it, click the like button, subscribe to the channel, and share it with your family and friends. I'll be back soon with another video. Goodbye for now.